This conference will now be recorded.
Hello, it's March 9th, and I am trying to put together a few video series dealing primarily with taxes. So I may jump in and out of this video, but then also show my screen so that you've got some visual aids to go along with it. This one's having to deal with proactive tax planning, both to help with filing 2020 and then things to think about for 2021. Of course, I focus on a lot of different areas, but this one's going to be tax planning. Try to be proactive rather than reactive when we're talking about tax planning. So focusing on 2020 taxes, there were 7 brackets. As you earn more, you pay more in taxes. There was a deduction that came into play in 2018. And so it limited state and local tax deductions to $10,000. So if you pay substantial state income and or property taxes, this remains through 2025. Long-term capital gains are shown here and the rates charged depending on amount of income. Charitable deductions are still deductible for those that itemize. However, if you don't itemize, there is a new line item on the tax form, line 9, that gives a deduction of up to $300, even if you don't itemize. Here's some of the limits for retirement plan funding. To explore these options, you can call me or your tax preparer. There's still some time to do these kind of accounts for 2020. Other things that typically think about when you're putting your taxes together: reinvested dividends if you have a non-IRA account, maybe just a general investment account. Carried over items, so if you change tax preparers, this might be something to make sure you communicate with them. Maybe losses or charitable giving in past years. And then you can do a QCD, which allows you to get a deduction on some charitable giving, even if you don't itemize. So looking ahead to 2021, briefly, I'll look over the tax brackets coming into this year. Capital gains are still more favorable than ordinary income typically, but that shows the category per income earned. And it's never too early to start contributing to one of the plans you see listed here. If you're looking for the annual exclusion, maybe for gifting, it's $15,000 per person. You could even open like a Roth IRA, maybe for a child that is earning income through work. You can open it up on their behalf. I had a client just do that recently where they opened up a Roth IRA for their 16-year-old that had started working and earning income. The new above the line charitable deduction increases in 2021 from 300 to 600. And then of course, get help with coordinating that. If you can find out what you think you're going to earn in 2021, then that helps on my end as well to make sure that we've got the appropriate strategy in place. And as you kind of remember in the reviews that I do, I often ask for your adjusted gross income for last year and this year. So a few other proactive strategies. If you're close to that standard deduction level, you might consider bunching, where you give like a donor advised fund. In this example, you may give 3 years worth of giving in 1 year, and then take the standard deduction in the other 2 years. And then over time, that donor advised fund that you put the charitable giving into, maybe in the future, maybe years in the future, as you choose charities, you can give it in future years. You've heard me talk about Roth IRA conversions in the past. They lower your taxable income long term. They get tax-free compounding growth. They have no RMDs, meaning you don't have to take money out of it. Whether you convert or all or some really depends on what you're earning and kind of how that fits with your overall plan. So make sure you're coordinating that with your advisor or your tax preparer. I mentioned the QCD, some of the details of that shown here. You can give up to $100,000 if you're 70.5 or older. You don't have to pay tax on that distribution from the traditional IRA. Stay safe. Like I said, part 1, there's other videos I'll send out, but that gives you maybe a couple ideas to proactively look at your taxes for this year.